All right, so let's dive into today's deep dive. And today we're going to be analyzing PCBL Chemical Limited.
Okay.
It's a company that's really making some big moves in the chemical world. I mean, you sent over a couple of press releases about their quarter and 9 months ending December 31st, 2024,
Mm.
both standalone and consolidated, and
Yeah.
what looks like a really cool investor update document.
Interesting stuff.
Yeah, before we really get into it, though, I think it's important to mention that this company, they were formerly known as PCBL Limited.
Oh, right, right.
So they've had a little bit of a name change, a rebranding moment recently.
Yeah,
Are you ready to get into it?
I am definitely ready.
Let's go. Okay, so.
And speaking of timing, it's interesting that these press releases are dated January 10th, 2025.
Yeah,
But we're talking about 2024 figures.
right. And that's because their board of directors literally just met on Friday, January 10th.
Mm-hmm.
To kind of give everything the official stamp of approval. And it's all right there, in black and white. The board reviewed it, and the auditors gave their unmodified conclusion, which I guess is auditor speak for everything looks good to us.
That's exactly right.
But what strikes me is that this whole board meeting with all of these financial results to approve
Yeah.
only took an hour and 10 minutes.
You're kidding.
I'm thinking their coffee breaks must be pretty short.
Well, it suggests efficiency, that's for sure.
Yeah.
But more importantly, it is significant that the auditors gave an unmodified conclusion.
Right.
Yeah. That basically means that they feel confident in the accuracy
Yeah.
of these financials.
Yeah.
So, we could proceed knowing we're working with solid information here. Before we get to the numbers, though, I am really curious about this rebranding
Yeah.
and the image they're projecting in the investor update document.
Right.
They call themselves India's largest and world's 7th largest rubber black and value-added chemicals company.
Oh.
That's a pretty bold statement.
It definitely is. So, before we dive into the financials, let's just, set the stage. What exactly is PCBL Chemical Limited in the business of doing?
Yeah.
Like, where does all this revenue come from?
That's a great question. So they operate in 4 main segments: carbon black, power, chemical, and battery chemical.
Okay.
This investor update suggests they're actively transitioning from a company primarily known for carbon black into more of a diversified specialty chemical player.
Okay, so we've got the classic foundation, but they're branching out.
Yeah.
And speaking of new territory, my eyes are drawn to the slide in the investor update
Oh, yeah.
titled Nanovase Powering the Future of Battery Innovation.
Interesting.
It's giving me some serious sci-fi vibes.
I love it.
What's the story here? Can you break this down for us?
Absolutely. So this nanovase venture is all about developing nanosilicon technology for lithium-ion batteries.
Okay.
And they're really targeting electric vehicles with this.
Interesting.
They're claiming some pretty impressive potential benefits.
Like what?
Enhanced battery capacities, meaning EVs can go further on a single charge, faster charging times, safer battery chemistries,
Wow.
reduced carbon footprint, and reduced cost per unit of energy stored.
Now that sounds almost too good to be true. Faster charging,
I know.
longer range, cheaper batteries.
Mm.
Are they really going to revolutionize the EV industry?
Well, let's not get ahead of ourselves.
Yeah.
It's important to remember that these are aspirations at this point.
Right.
The technology is still under development, and we need to see how it performs in real-world applications. There's a lot of buzz around nanosilicon for batteries, but it's still early days
Right.
before we get carried away with dreams of, super-powered EVs.
Okay.
Let's get back to the here and now.
All right.
What can you tell us about their revenue growth this quarter? Did they hit it out of the park?
Well, the press releases tell us that consolidated revenue from operations grew by a healthy 21% year-on-year for Q3 FY25.
Not bad.
However, and here's where things get a little interesting, the consolidated net profit actually decreased year-on-year for the same period, even with that revenue increase. So we've got this revenue growth story,
Yeah.
but the profit picture seems a bit muddled.
Interesting. What's
So
the
this-
story there?
Yeah, what's the story there? What's dragging down those profits? Is it just growing pains from this big expansion push, or is there something else going on?
Well, the press releases point to an impairment of goodwill charge related to their acquisition of Aquafarm Chemicals as a significant factor.
Okay.
It was a pretty hefty charge of 554.72 crore rupees. So it definitely made a dent in their profit figures.
Impairment of goodwill. I'm going to need a translation on that one.
Of course. Essentially, it means they had to reevaluate the value of Aquafarm Chemicals after acquiring them.
Right.
This could be due to a number of reasons. Maybe Aquafarm's performance hasn't lived up to expectations, or perhaps market conditions have changed.
Yeah.
Regardless, this revaluation resulted in a non-cash charge against their profits.
So it's not like they lost actual cash,
Right.
but it's still a reflection of a decline in the perceived value of this asset. Yeah.
Exactly. It's a bit of a reality check.
Yeah.
Now, on a more positive note,
Right.
there's also mention of a deferred tax liability reversal of 554.2 crore rupees.
Interesting.
It seems this is directly tied to the Aquafarm acquisition
Okay.
and actually resulted in a positive impact on their profits, partially offsetting that goodwill impairment charge.
Okay, so a little bit of a wash there then.
A bit of a financial roller coaster with the Aquafarm acquisition.
Right. Before we get too deep into the weeds, can you remind us what Aquafarm Chemicals even does?
Sure, they're a major player in the phosphonates market,
Okay.
with a diverse range of applications in industries like water treatment, detergents, and oil and gas.
So they're kind of all over the place.
Yeah, this acquisition appears to be a key part of PCBL Chemical Limited's strategy to diversify
Okay.
beyond their traditional carbon black focus.
Ah, so venturing into new markets and potentially more stable revenue stream.
Exactly.
I'm seeing a theme here.
Yeah.
But before we move on from the big picture, I'm curious about this 45% year-on-year revenue jump back in Q2 FY25.
Oh, yeah.
Is there more to that story?
Yes. It's worth digging deeper.
Yeah.
A jump that's significant begs the question,
Yeah.
what drove it? Was it due to higher prices for their products, increased sales volume, or perhaps a combination of both?
Mm-hmm.
And, more importantly, is it sustainable?
Good point. Maybe we can find some clues when we look at the breakdown of revenue by segment.
Yeah.
I'm also really curious to see how these newer segments, like chemicals and battery chemicals, are performing.
Right.
The standalone report hints that carbon black still brings in the lion's share of revenue,
Mm-hmm.
but I'm eager to see the full picture.
Let's dive into those details then.
Okay.
It'll give us a clear understanding of where their revenue is coming from and how those different segments are contributing to their overall growth or lack thereof.
Perfect. Let's do it. Okay, so let's break down this revenue by segment puzzle.
Yeah.
I'm looking at the consolidated financial results here.
Right.
And as expected, carbon black is still the powerhouse.
Right.
Pulling in over 5 billion rupees in revenue for the 9 months, leading up to December 31st, 2024.
Wow.
Yeah.
Yeah, it's clearly the backbone of their business.
Right.
For now.
Yeah.
But what's interesting is how those other segments are starting to contribute.
Yeah.
You know, for the same period, power generated over 226 crore rupees.
Okay.
And while the chemical segment is still relatively small,
Yeah.
it's showing promising signs of growth, especially as they integrate Aquafarm Chemicals into the mix.
Speaking of Aquafarm Chemicals,
Yeah.
the investor update highlights them as a major player in the phosphonates market,
Yeah.
claiming they're among the top 3 producers, ex-China, #2, of phosphonates globally, India's largest phosphonate producer.
Impressive.
That sounds like a pretty strong acquisition.
It does.
Yeah.
And it seems to be cornerstone of their diversification strategy.
Right.
Remember, phosphonates have those diverse applications in industries like water treatment and oil and gas.
Yeah.
So this move could help PCBL Chemical Limited reduce their reliance on the tire industry
Right.
and tap into new, potentially more stable markets.
It's interesting to see how they're positioning Aquafarm as a key part of their future growth.
Yeah,
But let's not forget, we're still grappling with that profit dip.
right.
What else can we learn from these reports about the factors affecting profitability?
Well, we've already discussed the impact of that goodwill impairment charge
Right.
related to Aquafarm,
Right.
which suggests their performance hasn't quite met initial expectations.
Yeah.
But beyond that, it's worth looking at some key financial ratios.
Right.
They can give us more insight
All right.
into their financial health and efficiency.
Okay, ratio time. What should we focus on here? What are the numbers telling us?
Okay, let's start with the debt-equity ratio.
Okay.
It gives us a sense of how much debt they're using to finance their assets relative to shareholder equity.
Okay.
A higher ratio generally means higher financial risk,
Right.
as they have more interest obligations to meet.
The consolidated statement shows a debt-equity ratio of 1.34 for Q3 FY25.
Okay.
Is that something to be concerned about?
You know, it's not necessarily a red flag,
Okay.
but it's something to keep an eye on.
Okay.
A ratio above 1 means they have more debt than equity.
Right.
So it's worth comparing this to industry averages and their historical performance to see if it's within a comfortable range, especially given their expansion plans, which often require additional borrowing.
Right, so debt levels are worth watching. What other ratios should we be paying attention to?
Another important one is the interest service coverage ratio.
Okay.
This tells us how comfortably they can cover their interest expenses with their operating profit.
Right.
A higher ratio indicates a stronger ability to meet those debt obligations.
Their interest service coverage ratio for Q3 FY25 is 2.11.
Okay.
What's your take on that?
It's a decent ratio, suggesting they have some cushion to meet their interest payments,
Okay.
but it's not exceptionally high. So again, something to monitor as they continue to grow and potentially take on more debt.
Makes sense. What else jumps out at you from these financial statements?
Well, the debtor turnover ratio is another interesting one. It measures how quickly they're collecting payments from customers.
Right.
A lower number is generally better,
Oh.
beginning efficient cash flow management.
Okay.
Their debtor turnover ratio for Q3 FY25 is 67 days.
So what does that tell us? Are they taking too long to get paid?
It's not alarmingly high,
Okay.
but it's worth understanding industry norms and their historical performance in this area.
Right.
If their collection period is significantly longer than their competitors,
Yeah.
it could be a sign of potential issues.
Good point. Are there any other red flags or, I guess, yellow flags in these reports?
Well, their current ratio, which measures their short-term liquidity or their ability to meet short-term obligations, is sitting at 1.06 for Q3 FY25.
Okay.
Ideally, you want this ratio to be above 1.
Right.
So they're just barely clearing that threshold.
Okay. So a bit tight on liquidity. Is that likely to be a problem going forward?
It's not a major cause for concern right now.
Okay.
But again, it's something to keep an eye on, especially as they embark on those major expansion projects.
Right.
Which can put a strain on cash flow.
So some potential warning signs, but nothing too dramatic.
Yeah.
It sounds like PCBL Chemical Limited is in a delicate balancing act,
Right.
pursuing ambitious growth while trying to maintain financial stability.
Yeah.
I'm curious, though, how does their revenue breakdown compare to what they're projecting in the investor update?
Oh, good question.
Are they walking the walk?
Yeah, let's take a closer look at the revenue mix they're reporting versus what they're aiming for.
Okay.
Remember, the investor update emphasizes this transition towards specialty chemicals.
Right.
But how is that playing out in reality?
Right. We know carbon black is still dominant,
Yeah.
but are those other segments growing as projected?
Right.
Are they making headway in reducing their reliance on the tire market?
Let's find out. All right, so let's dig into this revenue mix a little deeper.
Okay.
The investor update breaks down the revenue sources
Right.
for both PCBL Chemical and Aquafarm Chemicals. And it paints an interesting picture.
Yeah.
For TCBL, it's still largely about tires.
Right. Accounting for a significant 61% of their revenue.
Wow.
But for Aquafarm,
Yeah.
it's a much more diverse mix,
Okay.
with the oil and gas sector leading the way at 50%.
That difference in revenue mix really highlights the strategic intent behind the Aquafarm acquisition. They're deliberately expanding into new sectors
Right.
to reduce their reliance on any single market.
Yeah.
It's a classic diversification play,
Right.
aiming for a more balanced and resilient revenue profile.
It makes sense,
Well-
but it also adds complexity.
Absolutely.
Managing a company with such diverse revenue streams can be challenging.
For sure. Requires a different set of skills and expertise to navigate those different markets effectively.
Right.
It will be interesting to see how they adapt their management structure and strategies to handle this increased complexity.
So, to bring this back to the listener,
Yeah.
what does this all mean for someone considering investing in PCBL Chemical Limited?
Right.
What are the key takeaways we can glean from all this information?
I think the biggest takeaway is that PCBL Chemical Limited is a company in transition.
Right.
They're evolving from a primarily carbon black-focused company to a more diversified specialty chemical player
Yeah.
with a foot in the exciting world of battery technology.
It's a bold move,
Yeah,
but not without its risks.
for sure.
We've seen how that ambitious growth strategy is putting pressure on their profitability and liquidity.
Exactly. Investors will want to watch closely how they manage those challenges.
Right.
The success of their diversification efforts, particularly the performance of the NanoVest joint venture,
Right.
and the integration of Aquafarm Chemicals will be crucial to their long-term prospects.
Let's go back to the investor update for a moment.
Okay.
It's not all about financials and expansion plans.
Right.
There's also a section highlighting their sustainability initiatives,
Yeah.
which seems increasingly important for investors these days.
Absolutely.
They even mention receiving the International Sustainability and Carbon ISCC PLUS certification. Can you tell us more about that? What does that actually mean?
It's a globally recognized standard for sustainable and traceable supply chains,
Okay.
ensuring responsible sourcing and production practices. For a company like PCBL Chemical Limited, operating in industries with significant environmental footprints,
Right.
this certification is a big deal.
Okay.
It signals a commitment to sustainability,
Right.
which can be a key differentiator in the market and appeal to environmentally conscious investors.
And it aligns with their focus on green power generation,
Yes.
which is another point highlighted in the investor update.
Right.
They have a sizable green power generation capacity and plan to expand it further.
Great.
So they're looking to reduce their own environmental impact and potentially generate additional revenue by selling excess green power to the grid.
Right. It's a smart move both from a sustainability and a business perspective.
Right.
And speaking of the future,
Yeah.
the investor update wraps up with their key goals for the next few years, including that ambitious target of reaching 1 million MTPA carbon black capacity.
Wow.
They also expect a surge in sales volume from Aquafarm Chemicals after their capacity expansion, continued growth in specialty black and specialty chemical sales.
Okay.
And, of course, they're eager to see progress on that Nanovaj pilot plant for nanosilicon battery additives.
So they're painting a pretty optimistic picture of their future.
They are. But as always, execution is key.
Right.
Investors will want to see concrete results, not just projections and aspirations.
Well, I think we've covered a lot of ground today,
We have.
giving our listener a solid understanding of PCBL Chemical Limited's current performance, their ambitious plans for the future, and the challenges they face.
We've analyzed their financials, explored their strategic shifts, and even touched upon their sustainability initiatives.
Right.
It's a company with a lot of moving parts.
Right.
And the next few years will be critical in determining whether they can successfully navigate this transition and achieve their ambitious goals.
We've given you the pieces of the puzzle.
Yeah.
Now it's up to you, our listener, to assemble them and form your own conclusions about the future of PCBL Chemical Limited.
Here's a final thought to ponder.
Okay.
How will PCBL Chemical Limited balance its traditional carbon black business with its newer high-growth specialty chemicals and battery initiatives?
All right.
Will they be able to maintain their legacy while embracing innovation and venturing into these uncharted territories?
And remember, this deep dive is just the beginning of your exploration.
That's right.
There's a wealth of information out there, including PCBL Chemical Limited's own website, where you can dig deeper into their products, financials, and sustainability reports.
Absolutely.
We're confident you'll uncover even more fascinating insights as you continue your research. Until next time, keep diving.